The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show, TGIF. Looking forward to speaking for an hour on what's going on here with the global markets. Man, we have, had a really wicked bounce back here on the S&Ps. This is our daily chart on the S&Ps, and this is really a good kind of primer and lesson on why we've been preaching it might not be a bad idea to go home flat every day, even though we closed really ugly yesterday, and it was very, very promising for the bears. Any type of new news overnight can just jerk this thing around, and this is a fine example of it. And it's better to kind of keep a lot of the powder dry, so to speak, to get into something new in the morning in case something like this happens. And yesterday it was a great example. We, got into that 60-66 area that we've been talking about and actually breached it. I actually didn't get stopped out of that. We only hit a high of 2068, and then we just caved in 30 points towards the end of the day. So again, waking up this morning and having this deep in your face on some shorts is not the best morning to wake up to. So again, I'm a big fan right now of just going home flat and just with these fundamental deals that continue to pop up, the Greece thing, the Chinese government doing what they're doing with the Shanghai, and here's the Shanghai. Another pretty big day there, just basically crossing the border above 37.38 on the bottom of our profile in the Shanghai, and just kind of stopping at that POC. Remember, when we look at profiles, and I'm going to go into our scanner for just a second, I'm going to go our futures section. We actually have the Shanghai in our futures section. The POC 39.56 on that daily. Remember, in wide profiles, we've got to pay attention to this. There's that 39.56 on our chart. We've got to pay attention to POCs. Remember what a POC actually is. It's kind of the top of the hill, top of the mountain range. You kind of fall down one side or fall down the other. That's the mode of the profile, if you will. And if the profile is relatively wide, we've got to really seriously pay attention to those POCs. So that was the stopping point on the Shanghai today. We don't talk about that a lot, but again, in wide profiles, we need to. This is the daily profile here, and here's our weekly on the Shanghai. Remember, maximum resistance on this product will be around 42.06 weekly unfair lows, and that coincides to some degree with our daily unfair highs in that neighborhood up there. A lot of resistance around that 42 to 43 area on the Shanghai. I have talked about, how long is, the Chinese can be a weird bunch when it comes to government intervention, if you will. And we talked about not standing in the way of this once they started that path. Who knows where it's going to end up, but they're going to try to fix this. And this is a couple of days of them trying to fix it here. The margin debt, I think, I'm not going to quote the numbers, but the margin debt obviously increased quite a bit. They're trying to save some folks right now. The long term, if you just look at it plainly, you have markets that move up that fast. You're going to have markets that move down that fast at some point. So here's the situation on the Shanghai. Here's some of the numbers, and obviously the global markets like this a little bit better. That maybe they're not going to let this mechanical issue, is what I would call it, in the exchange, start bleeding into the economy in general. As we look at that, we're going to take a look at the Aussie dollar, which has got a massive amount of relevance going on to what's going on in China. Australia's biggest customer, absolutely. Australia is basically a hole. You dig a hole there and you start mining, and that's the majority of their economy They're trying to change that, but I don't know how they ever will, actually. It's a very small population on a relative scale. But there's the Aussie dollar. We talked about not doing anything here. Let me try to fix the noise in the background here. Let me see if I can fix that really quick. Al, I haven't changed anything. Okay, the noise is gone. Here's the Aussie dollar. We've got a new profile attempting to appear possibly tomorrow. Here's an orange bar. We talk about this a lot. Let's go into our scanner. Let's go into the Forex section really quick, and let's go to the Aussie dollar. And as you can see, if you notice, there's a peel back kind of yellow indication that we're having. Vega's turning. Basically, what this is Vega's turning orange, which means it may be telling us it might be time to start scaling out of our shorts, and that's basically what they're saying. The current profile is still bottom of the box up there, 76.31, but China doing better is obviously a little bit better for this currency. And if I wanted to go in, just to kind of give you an idea here, I'm going to go back to my index grid. I'm going to go to my S&P 500. And I'm going to go to my daily situation here. And I'm going to say, well, new boxes attempting to appear. Okay, so, and I'm going to only show matching results. And those are the amount of stocks in the S&P 500 which are showing new profiles attempting to appear. Now, a lot of red cells, some green, but a lot of red. And that is an indication, as of yesterday, that new demand areas were trying to appear. But you can do a sort to find those situations. So if I want to go in here and look at BlackRock, BLK. All right, let me just type that up. We're going to get back to the Aussie in just a second, BLK. So if you can see that, that's a new profile attempting to appear. Those are kind of warnings or alerts where you can look at those later, see where the new profiles have appeared, kind of put them on your watch list. But I'm going to go back to the Aussie dollar here, and we're going to finish up with that. I love trading the Aussie dollar. It's just it's not going to rip your face off if you're wrong. That's kind of where I'm at in my trading career. But it's been a nice trade on the way down. The latest nice breakdowns have been below 94, and we've just paid attention, letting the daily regulate this trade down. Had to get ourselves stopped at it for a little while, but again, a sign right now that it may be time to take some off the table finally. Didn't reach the bottom, but you never know when these things are going to end. So we'll have some new resistance areas, hopefully, to sell come tomorrow, and that'll be nice to see. Let's go back to our S&Ps for a second. I'm just going to try to cover a lot of this before the first segment is over on some of the things affecting the global markets here. So 2066 is where we're at right now. There's, again, no new profiles here on the daily to grab anything off of. Here's the 240s. Here's where we're at. Still in the middle of some wide fair auctions here. You've got some next level resistance and more appropriate resistance, more than likely around 2074, 2075. That could be reached. Those are those big numbers Tom and I talked about before. And the reason this 60 area is so important, here's our weekly unfair lows. Get that to pop up. Charts are frozen. Here we go. And why did that? God. How do I get rid of that? Hold on. Okay, there we go. All right. That was going to irritate me. All right, so that's the big number, 2060. So that's your weekly unfair lows. We talked about yesterday, selling as we move past that on the downside. But now, the 66 area, that's kind of a previous unfair low on the daily. As time moves forward, those previous profile inflection points mean less and less. So again, I'm a big fan right now, since you don't have really anything to hang on to here, of waiting until we get into this 74, 75 area up top of our box on the 240s. Be prepared to get stopped out of this and get back in below. And the reason I'm looking at this still from the short side is I'm paying attention to our breadth situations here. Now, remember, we're up 20, 25 S&Ps. Stocks are going to open. A lot of these numbers are going to change. And you have to pay attention to these breadth numbers and these breadth crossovers. As someone in, I believe it was Oakland yesterday, called in on Tom's show, we were talking about this. It's almost like a light bulb came on. Finally got it to where, when we look at these crossovers, those are very significant things when they cross over. So right now, we're still have the noise. Don't know where that's coming from, actually. Okay, I'm gonna wait for Al to finish typing there. I don't know what the noise is, actually, but we're gonna have to pay attention to these crossovers. I'm sorry, guys. I'll try to fix the audio on the break here. We have to pay attention to these crossovers when they happen, and on the long term and intermediate term, weekly and daily, you just got to kind of keep turning the rinse the same way until some of these things flip over. And when I say turn the rinse the same way, we're looking for resistance to sell still. Now, for guys yesterday afternoon that decided they throw a couple of darts and see what happens on the long side, that's playing a very risky game overnight. So we prefer the market opens and then try to have a plan of attack based on, the volatility that seems to want to stay right now. Okay. All right. A couple other things we want to cover before the first break. Got about a minute left here. We want to take a look at treasuries. I was kind of a fan of looking at this to maybe buy some support. Here's the support I was looking at. We talked about this past couple of days, 126.11. Weren't going to do anything with the 10-year because we had met those targets above. Not really looking at it from the short side around 127.11, that weekly unfair low. Migrated all the way back up there and kind of retested it. And here it is on the scanner. Where's our 10-year? There it is. There's that number, 127. Well, this is in decimal form, 127.79. And trust me, it rounds out to the number I was speaking of. But here was the kind of wait for the support area to be hit. Gonna have to wait and see how the market acts, but I'm still a big fan of trying to nibble here around 126.11. On the 10-year, which is kind of the 240 regulating this trade up here. With stops and force, of course. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey guys, welcome back to the show. Hey guys. Did I say hey guys? I meant hey guys. Sorry. Taking a look at the 10-year, we kind of finished with that, but let's just kind of cover a couple of the usual suspects here. Gold, man, just sad situation. Just nothing. Just long-term bearish. Caught a little bounce off that 1150 area, but just looking sick. For you guys who are gold bugs that are wanting to be long here, going to have to wait at least till we get back above 1170 for me to feel any type of warm, fuzzy feelings about gold. Sorry, just not looking good there. Let's take a look at a couple of stocks. Yesterday's show in the afternoon, we were taking a look at a couple of things that were holding up, some that weren't holding up. We're going to take a look at CMI. This is Cummins. All right, this is one that, it's a little bit scary situation, but the good news is on Cummins, and here's the daily. Been one that's been pulling back. Any type of market move up, you may be able to actually kind of look at this 128.57, maybe a little bit of a bounce, maybe putting stops down below. You may have a little bit of a trading opportunity. It's a relatively expensive stock, and you may just catch some people on the wrong side here on Cummins. This is right out of the scanner. Just pulled it yesterday afternoon. Let's take a look at a couple of usual suspects. Apple, we just want to clarify what's going on here. See what the pre-market situation is. It open yet? No. Apple's not open at all yet, is it? I'm not seeing it open. Anyway, this is a pretty big deal. I know this company's got a pocket full of cash, to say the least. This technical damage has not happened. I mean, we had it happen back in January 2014, just for a week, basically. This hasn't happened since then on a long-term basis on our profile. So this is a pretty big move. This is a pretty big deal. 123.79 is going to be resistance now on this particular product. You really kind of more than likely want to hope and pray that we can rally back up into that area and try some short situation. I think we're going to close below that this week. Next week would, hopefully we get a rally back into that major inflection point, and you can just maybe try to trade Apple down for the first time in a while. That's the situation on Apple. Let's take a look at Netflix really quick. NFLX. These are definitely some large weighted stocks. Here's the situation on the weekly. Talked about not shorting this thing, but we do have a new profile that's appeared this week. So the inflection points to pay attention to on the support side now in the long term is 601.49. Don't know if that's going to happen. We're actually up this week. Here's the daily situation. See how this works? The daily regulates the trade up, and we caught some good support off 644.66. Talked about not looking at this from the short side, and the market rallies. We could see 685 on the daily, and even 706. So stocks are not too high. Things when their highs go higher, you got to pay attention to that. Let's take a look at the XLF. This is one that talked about might be showing some cracks in the armor. Gotta hope so. 2450. Unfair highs on the weekly. That's where you're putting stops above. If we gap up, oh shit. Excuse me, 2463, we're already open. So we're above that inflection point. We talked about this, again, not looking to stay in these trades overnight, but right now we're above this inflection point. So, you want to sit tight, see if we can gravitate back down below 2450. And if it doesn't, it doesn't. No harm done. Let's take a look at Goldman Sachs. This is another one we looked at yesterday afternoon. Just to kind of put this on the radar screen, pre-market, we're looking at, are we open? I don't think we're open. I don't think Goldman Sachs is open. Is Goldman Sachs open? Does anybody know that? GS? I don't see it open. All right. Anyway, we're going to finish up with Goldman Sachs when we come back from break and cover a couple other things.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were taking a look at Goldman Sachs right before we left. Just going to follow up on that and hit some other topics here. Pulled this right off the scanner. I mean, we're looking at the XLF, hoping certain things would happen there. 204.28 unfair lows on the new profile on the weekly. So, we're looking for stocks, possibly weak stocks in the XLF to start looking at from the short side. This morning is going to kind of identify, hopefully, some weak instruments after they open. We got something in the background again? All right, well, hopefully. All right, we'll look into that after the show. Hopefully, you want to, as the market opens, the scanner's going to, you can keep a certain sort in. Here's a sort I just did. It was things that were showing weakness on our weekly, but trying to show some strength as breaking stride on the daily. We looked at Chesapeake Energy here, and these are sorts that actually, if you keep them up, they will keep repopulating real time as new instruments fall out or fall into that sort. So if you're looking for certain conditions, i.e. stocks that may have been beaten up that are just kind of turning, and that one there in that cell means that this is the first day Chesapeake Energy has actually broken stride and started kind of getting his head above a profile on an intermediate time frame. It's kind of a heat map too. Darker greens farther away from profile, lighter greens closer to profile. So Goldman Sachs is one we found yesterday. It was just sitting right on support on the long term. And this is a stock, in my opinion, it's not a short candidate for the XLF. You've got much better, much weaker looking situations to try to take advantage of on the short side of the XLF. But let's take a look at Chesapeake Energy just so I can kind of point out this little feature. And again, remember, just keeping this sort up during the day real time is kind of cool. It'll get some new ideas going. Here's the long term on Chesapeake. Obviously, ugly situation. But here we go. Now you've got some new kind of green shoots, if you will, here. Unfair highs 1151, and this is something pay attention to. Might give you a little bit of a ride up. And the good news is also is where to orient some stops. 1151 below there to be stingy. But what I want to do, let's go back to the scanner. I want to kind of resort things. This is our S&P 500 basket. And if I want to see things during the day that, let's just do a 60-minute here. And let's do a 240. Now, I don't. So what's going on here is we've done a sort, and we're trying to find instruments that are sitting at the top of 240 profiles. All right. So these are the inflection points, and at the same time looking for 60-minute confirmation that we're at least above even a shorter term time frame. This is, again, I don't know the true value of this sort. I just wanted you to see that this particular sort is going to keep repopulating itself. Let's get a more valid sort. Let me see here. Okay, let's do this. Let me get rid of that. Let me get rid of that. And let me do this. Let's say bottom. All right, so, and let's only show matching results. Okay, so what this sort's going to do, and it's going to keep repopulating with candidates, is it's going to say, okay, what's sitting literally at the bottom of maximum support on an intermediate. Northrop Grumman is a great candidate to look at, and also showing confirmation that we're starting to trade above the shortest time frame profiles. All right, so let's look at Northrop Grumman. Let's look at NOC. Okay, obviously a strong stock. Let's see where we're trading pre-market here. Pre-market, it looks like we're at, I hope that's right, 163.96. Okay, so we're opening up pretty well. We've gotten past some, and this was, again, the scanner's based on the current information that it has based on the data that we have on closing prices right now, because the market's not open and these dailies haven't redone. So we were sitting here at support around 162.78, kind of came back down into that area. It's a strong stock long term, without question. Long term stops could be below 156.94. But, again, this is pre-market. It's not exactly the scanner's not going to actually be the greatest thing in the world pre-market. It's going to give you ideas on the long term. But on the short term, we really don't have it populating every stock pre-market because every stock's not open. So we're going to have to wait a little bit. But basically what it's saying right now is, we've asked it to find instruments that are showing confirmations on short-term profiles and at the same time showing some positive long-term trend up situations, but at support on our daily profiles. So I said so much I confused myself right then. Let me back up. On this particular sort, we're just looking for stocks that have pulled back to support, yet at the same time showing strength on a short term. So hopefully, these are the green shoots you're looking for to power through and past and up off of this support area. And again, this is pre-market, so we're kind of a little disjointed here because the daily prices that we have are based on daily closes yesterday. So if I haven't confused anybody, let me know. Excuse me. I think you guys get the picture. It's just a little tough pre-market here. So keeping sorts up during the day and having them repopulate is always a good idea to show things that you want to see happening with our sorts. I'm going to reset this. All right, we're going to come back to our scanner in just a little bit. I'm going to cover a couple other stocks that were on my radar screen yesterday. X-Ray. This was one, we were looking for stocks that were possibly breaking down. This is a very thin weekly profile. Here's the daily situation. This is one that, I don't see a lot of conviction in. I mean, we were trying to find stocks that were below weekly, below daily, 240, 60. Might be a candidate on the short side. Going to have to wait and see how the market opens. But this is one that it really hasn't. It's not exactly the one I would want to trade here on the short side, but it is showing some weekly, daily weakness. And on the short term, we'll have to wait and see how this opens. And 5104 to 5137 could be considered a resistance cap for this, but we're going to have to see how this actually acts as the market opens. Remember, as the market opens this morning, in my opinion, because our breadth situation will still be negative, we're still looking for situations to sell. That's why I picked this up off the scanner. I was looking for things that were just showing weekly and daily weakness, and this is not the weakest situation in the world, I must admit, but we'll have to see, stocks that open unchanged or even down today. The scanner will show you those relative to profiles. So if we want to see, I'm going to kind of reset sorting here, if it'll work. Okay, here we go. I'm going to want to see stocks that are opening below profile. So, and I might want to see that on all time frames across the board. So if I wanted to see ultra shorts that are still below profiles in the long term, and maybe I want to see those below the box on 60-minute too. So, these are ones that would be opening below profiles on our long-term, intermediate term, and even our short term, to try to put those on our radar screen. This is yesterday's close, a lot of these, but that would be something I would be interested in from an individual instrument standpoint to try to take advantage of, being that we're still short-minded. Now let's go back to our S&Ps and kind of see where we're at. Drifting even higher. All right, so remember, we're looking for an index value around 74, 75, 76. Hopefully, we'll get some migration up there, and that'll be a maximum leverage point on the index itself. And then we'll also be looking and drilling down into instruments, trying to find weakness to take advantage of. And remember that relative strength trading game. Basically, stocks are showing their hand early. They can reverse, always use stocks. But trying to buy stocks on an up opening of this magnitude may not be the smartest thing in the world, all things considered that we've been speaking of. Okay, let's take a look at crude oil. Let's see here. All right. I think we've got 52.90 pre-market. Is that? No, 52.89 pre-market. Here we go. All right. So the crude oil situation is we talked about waiting until we had some new inflection points appearing. We've got this orange bar again, might be scale out opportunity on crude oil. This is, we've had a good move down, but I'm still a big fan right now of using these orange bars to try to mitigate any type of snapback in profits that we've already attained on the short side. So this is the weekly situation on crude oil. Maximum resistance will be around 56.43, but we'll have to wait and see on the dailies to see where these new profiles appear to try to get some new inflection points. You probably could be out of crude oil shorts right now, at least temporarily. Here's the 240 on crude oil. Again, new demand area happening here. Actually happened while we had price action in the demand area, but we could rattle around here. Short-term numbers on crude oil will be 53.28 down into 51.96. That's kind of be the balanced area range, if you will. Right now, I wouldn't do anything until we got into those numbers, and those numbers again, orange bar on the daily. That means we're probably going to have a new balanced area there. So we're looking at possibly a little bit of a consolidation here on crude oil right now. remembering that Navigator is still relatively bearish also on crude oil in the intermediate time frame. So again, I think any kind of type of snapbacks are more than likely not going to happen on crude oil, and we're going to be range bound. And those short-term numbers, 53.28 down into 51.96, should be some numbers that could be played around with from a short-term trading standpoint right now. All right, we're going to take a look at the yen. This has been something I've just been pounding the desk about buying support continually since the 101.33 area, 2,000 pips ago. But here's the long-term weekly. We've got 121.44. We talked about getting back in the game above there. Got stopped out of it temporarily, at least I did, on this pullback into support. But now that we're back above, it's, in my opinion, okay to get back in the water. And you've also starting to get some confirmations now. 122.18, getting back above there is also a nice sign on the yen. So short-term support right now could be 122.18, and then longer term 121.44. I still love this trade from the long side. You got some short-term resistance that you're going to have to contend with at 122.65. That's our short-term lid. Top of the box on a very wide profile on the Japanese yen USD cross. So again, the long term, I'm trying to look at this from the long term. I'm hopefully not going to allow myself to get into the noisy situations on the yen, but the long-term support now for me is 121.44 on the yen. Okay, let's take a look at Abbott Laboratories. This is something else. Yesterday we were looking at this. Obviously the XLV has been the darling of the ETF world. We talked about places to hide in situations like this with the market doing what it's doing, global unrest. Healthcare has just been unbelievable. Abbott Laboratories, or Abbott Labs, 49.43 unfair highs on the weekly. We've got some weakness on the daily. We're going to have to wait and see how this opens, but Abbott Laboratories may be in for a little bit of a pullback. And stops can be oriented around that 49.37, 49.43. Really didn't close well yesterday, and actually acting worse this morning, 48.87. This is something that may have a little bit pullback in the XLV finally here. And that's the trade on Abbott Labs. Guys, we'll be right back. Last break and cover the last 5 minutes. Hopefully a couple of currency plays.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're going to take a look at the euro really quick, then we're going to slide down to the Canadian dollar and the U.S. dollar. Here's the euro situation. Again, obviously the euro likes the new 54 billion new package, whatever the heck they're talking about for the huge economy of Greece. 111.46 was a leverage point I was trying to look at here on the daily. Again, not a big fan of going long the euro. Still feel like this thing over time is just, these are trading opportunities, news-related events, that provide some volatility. But overall, the long-term picture on the euro is still extremely dark, in my opinion. Here's the 240s. You've got another chance to take a shot here at 112.45. Remember, 112.25 was a big number before, but as we keep moving forward, that number becomes less and less important because it becomes more and more in the history. So right now, 111.46. I was personally stopped out of that short, but we've got 112.45, 46 again sitting on the euro. And again, we're just trying to find resistance areas to keep this type of situation. And we talked about targets initially, 109.49 on the euro. Those were met. Weekly unfair lows, we talked about that. Just kind of stepping off the short gas pedal because of that being met. But right now we're coming into, POC on the weekly, 112.0708, 112.48 up top on those daily. I mean, you've got some resistance up here. I'm happy to take a shot again on the short side on the euro. Let's take a look at U.S. dollar, again, coming down into maximum support again on this particular product, 95.30. We'll be very, very happy to see that number and would love to leverage along off of there with stops down below. I think we're just going to be back in the long dollar short euro game pretty soon again. So that's kind of letting the market come to us on that level. Let's take a look at the Canadian. I'm sorry, Canadian. Here we go. This has been one really has kind of been easy pickings. We've talked about buying support on the Canadian, buy support there, buy support there. A little bit of stop out action, but this is why you got to be willing to get back in the game even higher than where you got stopped out. A lot of people just don't get that, but it's better to have confirmations that it's okay to get back in the water. So where does the Canadian go now? On a relative scale, you got a new profile attempting to appear tomorrow. That means you might need to start scaling out of some longs here on the Canadian dollar, but we've got all the confirmations in the world that this has been a great long trade. And now you've got to be looking, this is an intermediate, you've got to be looking to kind of step off the gas pedal a little bit here. The U.S. dollar might have some relevance on this. Obviously, 95.30 is where we're looking the U.S. dollar to, is it 95.30 or 96? Let me just make sure. 95.30 is where we're looking the U.S. dollar to pull back to for a maximum kind of back up the truck long there. And be prepared that Canadian may kind of pull back a little bit also. All right, let's go back to the S&Ps 2068. This thing continues to climb. We're looking for this number today, 2074.75, to try to get some shorts off again. This is a very good prime example of why not to hold things overnight in this type of environment. We could have gapped down, 25, 30 points, but we've alternatively gapped up 25 or 30 points. So those are the kind of moves in the wrong direction. If you're on the wrong side, they can take you out in a body bag. So take note of it. We'll be back again tomorrow, guys, and I'll be doing Tom's show at 3 o'clock this afternoon. Stay tuned for all the guests here on TFNN today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.